Everyone, it's Kenneth Beer here with Stock Indices today, and today I'm gonna be talking about how to contain losses, how to contain, maintain, and manage losses. Well, not maintain. You don't want to maintain your losses, right? You want to manage your losses. You want to make them as little as possible, and you want to be able to cut your losses when it is necessary, right? So I'm gonna go over, the trades that I cut today. I cut out I cut out one trade today, which I had to close out at a loss, a pretty decent loss as well, and I just opened it up yesterday. So I'm gonna show you guys that losses are still possible with credit spreads. Credit spreads are not loss proof. That's a misconception that a lot of people have, that credit spreads are loss proof, or that if you do delta neutral strategies that um, uh, you will essentially never lose. And that's not the case. And I'm going to go over that today and how I lost money. So let's get straight into that. First thing I want to do, of course, is go over the indexes and the economic data reports. First initial jobless claims came out today. Previously, what was previously 214, up to 216. So jobless claims up a little bit, and then continuous jobless claims dropping down a little bit to 1.67 million. So off about a million, well, off about 100,000 there on uh, the continuous jobless claims. Real gross domestic product revision, that is up to 3.2% from previous numbers at 2.9%. Um, and then we got the revision numbers coming in at 0.8%. Previously was 0.3%. Real final sales to domestic purchasers revision is up to 1.5%. Previously was at 0.9%. Index of leading economic indicators is one negative 1% was previously at negative 0.9%, so a little bit lower on that number. So with that being said, I'm gonna hop straight into the charts so we can see exactly what was going on today. Look here at the SPY. The SPY had a nice bounce yesterday. We were looking at that bounce at the 377. I called that out pretty nicely. And yesterday, our portfolio was up. I actually closed out an Amazon trade for a good profit, about $146 of premium. I closed out yesterday. And today, the market is dumping. So we saw a quick reversal, and that bounce did not last long at all. So it's a pretty strange candle here. We got down below the 378 and we pulled back aggressively midway throughout the day. So that shows us that buyers are defending this level, but it was still enough to get me out of my Nvidia position. Let's go ahead here and take a look at Nvidia, so you guys can see exactly what I'm talking about. So Nvidia right here was on an uptrend. I played put credit spreads yesterday on Nvidia, and today it just dragged. I sold the 150 strikes, and it dumped me out of there. I was down over 100% on that spread, which was more than what my max loss is supposed to be. And I just, I honestly I could have continued to hold because it didn't necessarily break my short strike. It wasn't beneath my short strike. You can see right here we're sitting at 153.39, but it was just, it wasn't it wasn't ideal for me to continue to hold on to that because I have rules. You see volatility is high, and I just was like, you know what, I'm gonna stick to my rules. I'm down 111%. I'm gonna close this trade out. So that's what happened with Nvidia. uncontrollable circumstance here. We saw a good play. We saw that the market had bounce potential, reversal potential. We caught a quick reversal, and the market proved us wrong. But you gotta not have that be personal and stick to your game plan. See right here, I close out the spread of Nvidia for about $334. I closed one out at 340 and one at 334. So that was about about 350, I believe. Let me see. So here it's telling me my loss is 227, but from the math it's about 350. I don't know if there was some fees in there or something like that. It may have been because oh, okay, I see. Yeah, so I was up. There was some value from theta taken out and stuff, which caused it not to be as big of a loss. So it was only 227. So I didn't lose 350. I lost 227 on it. So it was a $227 loss on that trade. So a little bit more collateral. I was a bit heavy in the Nvidia trade, which is okay, because I cut my loss at the end of the day. Didn't go over my max loss rule, total. Like, let's do the math. Yeah, so I mean, it's about 6% of my total account value. Maybe that's a little bit too much of a loss. Maybe I should go in with, less collateral. I did go in with two contracts. I could have went in with one. I'd also have my SPX trade on still. So my SPX trade, I didn't lose that much on my SPX trade. My SPX, and this is just me being completely honest with you all, because that's what I do. Stay honest. Tell you guys the real. So my SPX trade, I'm still in. I have a further away strike than what I do. I think I have further deltas. So the SPX, I'm currently up on the SPX right now, up $55. Lost $90 today though, and you can see here I sold the SPX for a $2 collateral. I mean $2 credit. Collateral was 800. Way better trade than this one right here. So I'm still in this currently. We have the 3700s all the way down here sold. So I'm positioned well on this, and the market has to tank significantly. As the tank at least another 3% for me to be out of the money on my SPX trade. In all honesty, I'm gonna be honest with you guys. I could have continued to hold the Nvidia trade because it didn't breach my short strike. Not only that, I still have, you know, I still have until the 6th of January. 15 days. I still have 15 days. And so I want you guys to do this, right? You're trading credit spreads, you see your spread, you see you have a lot of time left on the spread, and you're down 100% on the spread. What I personally am going to start doing is, number one, having a lower delta. My delta was not the best on the NVIDIA trade at the time that I put the trade on. And two, I'm going to, if I have more than 10 days left to expiration, I'm down 100%. I'm going to not be so much worried about the profit that I'm down or the P&L that I'm down. I'm going to be worried about how many days do I have left. Because what that tells me is, okay, I have 10 days left. There is a higher probability that it's not going to stay out of in the money or close to the money. It's probably going to go back in my favor in the next 10 days. Let me let some of this theta eat the premium out, so that in the next 4 or 5 days, that loss isn't going to look like 111% anymore. It's going to look like 50% or 40%. So I got freaked out by seeing the large percentage that I was down. And I focused in on the fact that I still had 15 days on this spread. I could have stayed in NVIDIA for another 15 days, which is crazy. And just by the look of it, like, NVIDIA, it would have been such a low probability that NVIDIA was going to continue to go down to these lower levels. You know what I mean? We got support. Look at the pullback. But, got freaked out. Was looking more at the P&L than the actual trade and the construction and infrastructure of itself. So, it is what it is. I learned from the mistake. I didn't need to lock in that 7% loss on my whole portfolio. I had to lock that in. I didn't lock in that huge loss, but I did. I could have just waited. Hey, look, it's a down day, down 100% on the spread. But look at the full picture of it. The full picture is that you have 15 days left. In the next 5 days, you still have 10 days left. The next 5 days, theta is going to eat out a lot of that position. So you want to take as big of a loss. So, with that being said, my goal going into right now is go in with a little less on each trade, so that I don't have to be forced out like that. Going with a little less on each trade. I think I was positioned with 2 contracts a little bit too big for my portfolio, so that loss was, kind of messing with me psychologically. When really all I had to do was look at, hey, dude, you got 15 days left. Theta is going to help you in the next 5 days. Next 5, 6 days, you have time. And the trade is still in your favor. Yeah, there's a down day, but look, we're at support. Look at the key technicals of it. Support at the 50-day SMA. Most likely, we're going to see a consolidation in between this range. I bet you that's what's going to happen. Matter of fact, in my next video, I'll update you guys on how NVIDIA is looking. Matter of fact, you guys look at it yourself. Look at your stuff the next couple days and see what NVIDIA does, and I bet you it consolidates. And that's all we would have needed to make money on that spread. But on the month, though, I'm still up. Currently, I'm still up, so I'm not complaining. I still am up on my SPX. My plan now from here, I'm going to continue to look at NVIDIA. And I may, depending on what NVIDIA does, if we support here, just get right back in it. Sell some more. Probably at a lower strike, probably at the 140. The 140 is the 20. It's like, look at the 150. The 150 is now the 40 delta. So, honestly, I may go to the 140, sell here. 135. I'd sell like the 130s, get 126 out of this. Let's see what one contract looks like. 126 on 874. That's decent. I could do that. Yeah. So instead of going in here, I think like I did something like this the last time. I was risking a little bit too much on that trade. So yeah, looking at this, about 126 I would do. And that's what I'm gonna look at for tomorrow. See how the video acts on that. Is there any specific news? Not any. Chip stocks were down following Thursday as Micron Technology reported weak results and said demand for semiconductors has softened. NVIDIA declined more than 6%. AMD fell 1%. Qualcomm down 4%. So a lot of these semiconductor stocks are down because the Micron Technology reported weak results and for the demand of semiconductors. So that could be, a problem. So we want to see, how the market, how NVIDIA, since it is a semiconductor stock, how it acts, and that it doesn't continue to fall off because of that news and because of the market's weakness. So I keep my eyes on that. But the moral of the story is, when it comes to trading credit spreads, yes, you will take losses. Yes, stick to your plan. Stick to your plan as of how much, at what point you're going to take the loss at. But another rule that I'm going to implement for myself is look at the amount of days you have left. If you're down 100% and you still have a full 2 weeks to go into expiration, don't cut the trade. Wait, because you can cut that trade, yes, still at a loss maybe, but at a lower loss because of the theta. The theta is going to eat into the trade and you're going to begin to make money back. Even if you're in the money. Even if you're in the money, the premium's still going to close. Now, if you close in the money, then you're going to take max loss. But if you're in the money, let's say when it's 5 days left, you're not going to be down, but not as big because theta is going to eat away at that contract. So keep in mind, don't get freaked out when you have a lot of days left to expiration. Stay patient, stay calm, and that's all I got for this video, guys. Those are my trades. That's, like I said, I'm being honest with you guys. That's what I lost NVIDIA trade, still in my SPX trade. Tomorrow we'll look to see how NVIDIA reacts at this 148 level. We'll look to see if it can hold up from here, and if not, we'll look to see how SPX reacts. SPX, like I said, had a pretty big pullback midway throughout the day, so I want to see, okay, what happens tomorrow. Are we going to continue to fall from here? This is a pretty not bearish, but bullish candle. In my opinion, it's a bearish candle, but it's a bullish candle. Like, why did the market get down that low? And then, you got to look at it. Why did the market get down that low? And then why did the buyers buy it back up so aggressively? So we have this huge wick right here. You know what I'm saying? This is telling us something. So I want to see how we react tomorrow. Not predicting anything. I never want to predict. I'm not a predictor of the markets. All I am is looking at what the information is that is being given to me periodically, and then I'm taking that, making an assumption. Okay, well, what is most likely to happen? And then after I make that hypothesis, we go ahead and we invest upon it, and we manage our risk accordingly. So, with that being said, I'm gonna end this video here. Hope you guys enjoy that. Just getting a little bit of what I'm doing, and hope you guys can learn something. If you did, leave a like, comment, and subscribe, baby, because we're gonna be back at it again tomorrow. Just going over what I did, because I already know I'm gonna make some decisions, some critiques, something like that tomorrow, because tomorrow's Friday, so something's gonna happen tomorrow. But yeah, with that being said, hope you guys enjoyed this video. Leave a like, comment, subscribe, share this video with anybody that else likes financial information or likes trading the stock market, and I will see you all in the next one.